Hey, hello everybody, good afternoon. Welcome to the BDO webinar series for the not-for-profit industry. This is our first one, so big welcome. Thank you for coming on. When you went to register for this session, you hopefully would have seen that there are other sessions in this series. So if not, afterwards, please jump back onto our website, take a look there, and you'll see there's a few webinars tailored just perfectly for our not-for-profit industry. So thank you for joining me. I'm presenting this one today. So my name is Judy White. I have been very fortunate to have lots of clients in this industry, which I do thoroughly enjoy working with, as some of you are on today. So a nice warm hello to you. We do find that there are areas of tax that often operate exclusively for not-for-profits. So that's the focus of the webinar today. That is particularly the case with the FBT law, and I will also cover super guarantee later in the webinar, perhaps not quite as differences for not-for-profit, but I will focus on that near the end and raise some superannuation guarantee as well. Also, just before I kick off, I do want to just say, for those of you who don't know me or who haven't heard me present before, I do love to have a very informal presentation style. So I love to hear from you. We have the chat box there. Please put any questions or comments. Good comments might be nice, compliments, but oh well, we'll see how things go. But please feel very welcome to even put a comment in there or a note, but any questions you have, I just really encourage you to pop them in the chat box throughout the session. So I don't mind what those questions or comments are about. They don't even have to be what I'm currently presenting on. Pop them in there as you think of them. And I will be keeping an eye on that chat box, and I would like to answer them as we go. I think the best takeaway from these webinars is actually having that conversation where we can, and having you being able to raise things and also see what other people on the webinar are raising. So please go for it, pop them in there, and I would absolutely love to hear from you. So I think that leads me nicely into making a start today. So just going here to our slides. So this is me. Hello, everybody. If you haven't met me, just a little bit about me there. I am in, I should go back for a sec. I am in Brisbane. We are going to go for about an hour today, which means finishing about 3 o'clock Brisbane time. Now, this agenda is for FBT. As I mentioned, we will get to super guarantee a little bit later in the webinar today. So just on fringe benefits tax, what do we want to chat about? So we want to do an overview, and then I think particularly relevant are these sort of things for yourselves in the not-for-profit industry. Let's have a little look at employee versus volunteer versus independent contractor. Then we'll cover the FBT exempt employers and FBT rebatable employers. We'll talk a bit more about capping thresholds, the general capping threshold, the separate cap for salary packaged entertainment benefits, generally some exempt benefits, a little bit about lodging an FBT return. And just before I forget too, I don't think we noted on the slide, the FBT return, there is actually a lodgement concession this year. So even if you're not using a tax agent such as BDO and you are self-lodging, you do actually have to the 25th of June. And I don't think it's actually quite a lodgement extension as such, but I do know that the ATO have got on their website that they won't apply a late lodgement penalty this year if the FBT return is lodged by 25th of June. So for any of you there that were a bit concerned about that 21 May date, then that might be helpful for you, although the payment was still due back on 21 May. So I'm just talking at the moment about self-lodges. So if you're in a not-for-profit organisation, you lodge it yourself, that's those particular dates are relevant. But if you do happen to use BDO, or you do have a tax agent you use, then payment and lodgement is due on the 25th of June. So I just want to make sure I mention that now. Sorry to give you all that detail while I'm still on the agenda page there, but that was a fairly recent development with the concession for the lodgement date, and I don't think that's on that slide. So after talking a bit more about that, when we get up to that part on lodging an FBT return, we'll also look at some other concessions. So certain benefits provided by registered religious institutions, car parking, remote area concessions in particular, and also what would be an FBT webinar without talking about entertainment. So don't worry, we'll definitely be talking about entertainment there as well. And in particular, for not-for-profits is tax-exempt body entertainment. Now, just before I change the slide and get into this agenda, I mentioned earlier that I'd love to encourage questions or comments in the chat box. Well, we do have one already, so thank you for the question. What are the requirements for ministers of religion? Perfect. So as you can see there, we actually do have a slide in particular about registered religious institutions. So I might therefore leave that particular question until we get to that slide. So, so hang in there for that one. That's something that will be coming up. As a very brief, quick refresh, so FBT is generally payable by not-for-profits. There are exemptions, etc., which I will touch on shortly, but starting point is potentially there could be FBT payable. So that's the employer providing fringe benefits to their employees or to associates of their employees. Now, we're not just talking about benefits provided by the employer themselves. It could also be by somebody else, not necessarily the employer. So it could be by an associate of the employer or even under an arrangement with a third party. So the point is for you to be aware of whether your employees are receiving benefits. Now, if you as employer ought to reasonably have known that those benefits were being received by your employees, even if it is by a third party to your organisation, unfortunately, the FBT liability does stay with you as employer. So very important to be aware of any benefits that your employee may be receiving, or knowing that if you are aware or to have been reasonably aware of those, though, that there could be actually an FBT liability. So we often suggest to employers that they may want to consider their policies, so their HR policies, for example, where they can always say comment that employees perhaps can't receive benefits, or have some guidelines around employees receiving benefits, just so that the employer isn't caught with having potentially a liability, especially if, for example, you might be an FBT exempt employer, but often those caps that you're exempt to are often maxed out. So, you know, there could be still an amount over and above the cap, and you might end up having FBT. Or if you're a rebatable employer, it just means that you might have already utilised all the rebate, so you might have full FBT on something. So that's just something to bear in mind. Separate to income tax, FBT is its own regime. Something I just thought of there too that I don't think we actually have a slide for there is just remembering too that there is the reportable fringe benefits regime. So that's where any fringe benefits are still reported, even whether exempt, rebate or what have you, you can still actually have your employees having the reportable fringe benefit regime. So that's the ones that go on the PAYG payment summaries, now called income statements under single touch payroll. Now we're into June. That's the time of year where we start gearing up, where, you know, payroll or HR might be looking out for those reportable fringe benefits to go on the PAYG payment summaries or income statements. So that is something too. And I'm just mentioning some of these other things as they do come to mind, especially if I realise we don't have a slide for it, just to also encourage any of you to reach out with any questions or comments that you might have as we go along today. Concessions. So generally not-for-profits do have a range of concessions. An organisation may be exempt from income tax. Quite often not-for-profits are, but unfortunately FBT is a separate regime and does still apply. So FBT only applies to the employees. So, you know, we have, I guess, this issue then of who is an employee. And so therefore, if you are engaging volunteers or independent contractors, how they are defined for, or the meaning is for tax purposes, then there is a possibility that you might actually have an FBT liability. So what do I mean by that? Okay, so for tax purposes, we do have some different rules. So you may be used to calling persons that you engage with as your volunteers or as your independent contractors, but just to be aware that there are sort of specific requirements in terms of the tax legislation that can sometimes pull those persons in. So a classic example there is where there might be somebody who, for all intents purposes, you are feeling that they are volunteers and you would commonly refer to them as that. But in actual fact, they might be paid a few $100s, you know, every 3 months, or, you know, $1,000 every 6 months, or there might be an actual payment that does go out to them. Now, the ATOs doesn't, unfortunately, issue exact dollar guidelines, as you can imagine. I'm sorry, we don't quite have that kind of certainty for you, but once a volunteer is receiving something, and even over that, you know, few hundred threshold, there is actually a possibility that they might in fact be treated as an employee for tax purposes. So I don't mean an employee generally at common law or anything like that, but I do mean that for the purposes of the Fringe Benefits Tax Act, there is a possibility that those volunteers can be brought in. Now, if it's a volunteer or perhaps it's an independent contractor, so being very careful about the way you engage with contractors. And just on that point quickly, so contractors is you know, where you're engaging and they are a genuine independent contractor, so they're engaged for a result, you know, that they have, you know, other clients, not just yourselves. They're not wearing your uniforms. You know, there's a whole range of conditions or facts there that one would need to look at, and it can depend on each circumstance, so unfortunately from client to client. But just being a little bit aware, I'd certainly recommend going back regularly and having a look at the persons that you're engaging with as to whether they're volunteers, in fact, and also whether you have actual genuine independent contractors. Why do we care? What is the point? Well, the point is that if those persons are in fact would be considered employees for FBT purposes, and if you do provide benefits, for example, perhaps this person might be provided with a motor vehicle, and there are times where they take that home overnight, so there is deemed private use, then in that case there can actually be an FBT that arises. Fringe benefits tax is generally quite expensive, especially when you're in the not-for-profit space. you're not paying income tax, and FBT can actually be something that could be quite costly. Now, just checking the chat box, and oh, I love this question. I was hoping this would come up today, and here it is. Are board members considered employees or associates? Now, this is a really interesting question, and I feel like I could talk for the rest of the session on this alone, so I will behave and just make a comment or two. Oh, sorry, because there was quite a bit of content I guess I was hoping to get through today. So it's a couple of high-level comments. Firstly, board members, so whether they are directors, or if I can just answer a bit more broadly to cover more of you on the webinar today, not necessarily just directors, there could also be out to other sort of office holders in your organisation. If you're not an actual company, for example, so where there are payments. So this is important to emphasise. So because I do aware of where there were board members and they're not paid. Okay, so where they are in fact paid, so they receive remuneration, there is a specific section in the PAYG withholding regime which requires tax to be withheld on those payments. So just moved away from FBT for a moment into PAYG withholding. So, the tax that's on wages, for example, well, there is a requirement for taxing the payments made to those persons as well. Why is this important? Once you have a PAYG withholding event, you basically will have FBTs. You actually do this kind of journey, if you like, through the meanings in the FBT Act, and you step through 3 or 4 different meanings, but you get to it basically being salary and wages, being an employee, and therefore being a fringe benefit. So that's something to be really aware of, is are you remunerating board members or similar for your organisation? And if you are, then that's something to have a look at. Now, of course, the other important part about that is superannuation guarantee. So there might be a super guarantee liability as well. And the last thing I just want to mention on that is that I'm talking about board members being engaged as an individual. So they can be different if they're via a company. If they're via a company, there may not in fact be an employment relationship, and therefore no PAYG withholding and no super guarantee. So the comments I just mentioned before are where you are engaging that board member as an individual person. And can I just make a quick comment on that? This is how it feels in the world of tax. As soon as something comes out of your mouth and you make some statement, you feel like you're almost backtracking and saying, accept this or not when that. And so if you could bear with me today, I think it's good to give some broad statements though, to keep things a bit more simple wherever we can. But sometimes there are exceptions to the things that we state as well. So I will try to get through any exceptions as we go along as well. So another question, Judy, what about where the entity reimburses a volunteer for expenses they have incurred? Perfect question. That is different. So we're not talking about remunerating anymore. Okay, and that's what I just discussed. I just was based on remuneration, and that was the discussion on PAYG withholding requirements, super guarantee requirements, and possibly FBT as well. When you are just simply reimbursing the expenses that they have had, their business expenses, that is not the same. That does not create those liabilities or create that connection back to employee in the FBT land. So just on that one, be very careful about that. So this is where you are getting those invoices for those expenses, and you are reimbursing the exact amount. I'm not talking, oh, here's $200 for that travel. That wouldn't be a reimbursement. that would possibly be an allowance. So just to recap, so reimbursements are where you are paying for the amount that has been expended, and you are getting all the receipts to verify those amounts that are of those expenses. And just another question as well on the chat box. If you provide board members with gift cards, does this attract FBT, please? Thank you. Now, these are really great questions, so thank you. I just really appreciate getting these. So can I just say on that, generally, my answer to that is no. Of course, the extreme side is giving, you know, someone a $200 voucher, you know, every month or more regularly, to try to, in effect, get around, if you like, paying them in cash instead, giving them vouchers, thinking that that will solve this tax issue. That won't work though. Once you are giving vouchers in a way that would be reasonable to conclude that that is more remuneration, then unfortunately that will be considered remuneration instead. But vouchers where the board member is not being paid won't necessarily bring them into the net of FBT. If the board member is already being paid and it already is subject to the FBT rules, then you're already in the net, and you would just have to have a look at those vouchers to see if they are actually going to be subject to FBT or not. So where those vouchers aren't considered entertainment, and usually they're not, you know, they might be to, you know, Coles or something similar to that, and they're under $300, then they're most likely going to be a minor benefit and therefore exempt from FBT anyway, as long as they're not provided regularly and frequently. Thank you again for those of you just popping those questions in, and I hope you can all see that. That was great. That helped us to talk about some of the issues, and I would love to keep talking about more issues. I will keep going on the slide pack now. I know you'll all have or get a copy of this anyway, so please keep sending those questions in, and I'll be very happy to answer those, and also, of course, happy to jump around to all those connected issues as well. We don't have to just talk about FBT or super guarantee. We can talk then about some of the other things that are important consequences of these items as well. So I think that's probably covered the employees part. Now, just before I get to the concessions, I just can see one more question there. Director of an Australian not-for-profit is a foreign resident and paid in US and receives benefits in the US. Is this Australian not-for-profit liable? Now, that is an excellent question. So if I can just take us back and say a couple of broad comments, because as you can imagine, this area can get quite complicated. But as a broad comment, the answer to your question is there a PAYG withholding event in Australia? And that is essentially what you're looking for. And that can be applied to other questions of a similar nature. So it sounded like there isn't, from what the information you have got there in that question. It's once you have that requirement, then it will trigger salary and wages and that definition, and it will trigger the definition of employee, and it will actually bring you into the fringe benefit meaning in the Act. So perhaps if I leave that point there with you, and just always feel welcome to write back with any other questions if that doesn't, if that provides some more questions that you might then have. So moving back to the slides for now, the main concessions. So again, we have a range of people on this webinar today, which is terrific. So I will need to touch on a number of different alternative issues. So you can see there's two up there. Well, actually there is, I guess, a third. So I'll just mention quickly as a summary then, if your organisation is a not-for-profit, you will either be 1, FBT exempt, 2, FBT rebatable, or 3, none of those, which is effectively fully taxable for FBT. So if we just work through those for a moment, FBT exemption is the hardest, I guess you could say, one to get. So that's where you do have requirements in the way your organisation is set up and operates. So typical examples of FBT exempt employers are public benevolent institutions, health promotion charities, public and not-for-profit hospitals, and public ambulance services. Now, those organisations are FBT exempt, but they are subject to capping thresholds, which I'll run through shortly. And then secondly, the FBT rebate. Now, the FBT rebate is where you do qualify. So there are specific categories under the legislation to qualify. It's not as though all not-for-profits that are income tax exempt not-for-profits. It's not as though you are one or the other. You do have to get into the conditions for exemption or rebate. And if your organisation does not meet, say, the specific categories of the FBT rebate, then you won't actually have access to that either, and you'll effectively be quite similar to a normal taxable entity in the for-profit space. So just want to mention that third one because it's probably a bit more rare, but I have come across a few organisations along the way that don't end up having either status. So just on the FBT rebate, it's 47% of the gross FBT payable. So 47%, but effectively say you're paying half. Okay, so effectively half of the FBT that you would otherwise have paid, 47%. So this is available to registered charities that don't meet the FBT exemption, but not those that are funds or established by the government, for example, universities. And as I mentioned, there are other specific categories under the law, and that can include things like certain scientific institutions, trade unions, certain other tax-exempt type organisations that might be established for, say, community services. Also some that encourage sport, art, science, music, literature, and a few others like that. So that's just a bit of a flavour, not all of the categories, but some of those ones that you can be entitled to the FBT rebate. And just also on that capping thresholds, this slide just then takes us through what they are for FBT exempt and also rebates. Sorry, the FBT rebatable employers are only rebatable up to the capping threshold of 30,000. Now, very importantly, as you can see in bright red there on the slide, those capping thresholds are the grossed up thresholds. So to make this as simple as possible, that even though there are two gross up rates for FBT purposes, if we take the lower one, so if we take 30,000 and we divide that by 1.8868, which is the lower gross up rate, then that gives us about $15,900. So what I'm saying is that the employee can receive benefits up to, say, $15,900 if they were all, if the lower gross up rate was relevant to all of those, then it's actually $15,900 they can spend, not 30, because it's a grossed up cap. So bit of an unfortunate one that we have it termed in that way, because that can, of course, get a bit confusing in practice. Now, I can see a couple more items in the chat box, so I might just jump over there before I get to the cap for salary package entertainment. So that one I've just got coming up on that slide. So I've got a question here. If a volunteer's organisation is paid a donation, does this have any effect on FBT? Note the organisation is also a not-for-profit. So no. So a donation shouldn't. And sorry, I'm just making sure I understand the question. So there's an organisation and there's a volunteer and is paid a donation. So no, I'm thinking no, but please feel welcome to write back if I'm not quite understanding that question. Yeah, deductible gift recipient is another aspect of not-for-profits. I know volunteers can often receive honorariums. Again, just be a little bit careful on the quantum of those. And there's another question. We are a Bowls and Community Club. Would we be entitled to FBT rebate? Ooh, I haven't done a Bowls and Community Club for quite a few years. Let's see. So just bear with me off the top of my head. I might be a little bit rusty on that one. Not-for-profit tax exempt. So you guys are probably not exactly income tax exempt. You're probably relying on mutuality principle, I would think. I'm just getting a sense about whether you may not. But look, that one, I might need to think about that a little bit better in case I'm not thinking that one through. So perhaps if we could get your contact details, my email should be there on the slide. I'll make sure it is at the end. Feel very welcome to reach out to me with that so I can talk a little bit more about that one. Yes, I probably need to get some more clients in that area so I can brush up on some of that, those rules. And so then just going back to the capping thresholds, there is a separate meal entertainment, a cap for 5,000. Again, it's a grossed up cap, and it was introduced for the FBT year ended 31 March 17. And since then, now that is for your FBT exempt or rebatable employers, and it's where the meal entertainment is salary packaged. So we're not talking about the Christmas party. We're talking about where, say, an executive may wish to package a holiday or something like that. A holiday, no, I'm so sorry, that's actually recreational, though that can reach out in terms of sorry, there's another entertainment facility leasing expense area that might actually apply to. So let me just take that back a bit. So say there is some meal entertainment that a executive is usually where we see that in, but still any employee has come to the organisation, said, I want to package this, and it is meal entertainment. So if they're doing that, then it's subject to the cap. But it doesn't cover things that are not salary package, and typical example of that is the Christmas party. So we are talking about not just the entertainment by way of food and drinks, this is meal entertainment we're talking about, but we all are also talking about accommodation and travel that gets actually tied up into the entertainment, and therefore also you'd have to get the total and then compare that to the $5,000 grossed up cap. So that's a little bit about the capping threshold. So that seemed like a lot of talking there for a while. So I just thought we'll just do a couple of quick examples just to explain those items a bit further. So if we do an example on FBT exempt employers firstly, and then we're going to use this same information and do an example on FBT rebatable. So see, we've got here car fringe benefits, 7,700. We've also got salary packaged restaurant meals. These are usually done via some type of card, entertainment like card that some of the financial institutions tend to also provide as a service, where it does restrict the items that you can put on that card to just your restaurants and that, so that it is just used for meal entertainment. So that sort of thing. And then maybe there's something else to make it nice and simple. Let's say it's a packaged home mortgage. Now, I know there's quite a lot of people on today, so it might be maybe a little bit harder to just try and throw over to you with some questions. But I do challenge you, if you are even a little familiar or from an FBT exempt employee organisation, you might see straight away what's happening here. Okay, so just to keep this example nice and simple, that 15,900, so you may recall me mentioning before that the 30,000 cap for the exempt benefits is a grossed up cap. And so you can see on the right-hand side there, we've got type 1 or type 2. So a home mortgage, for example, would be a type 2, which is the lower gross up rate. So 15,900 times 1.8868, which is the lower gross up rate, gives us 30,000. So some of you might have had a keen eye and can see there that before I get to the next slide, straight away we can see that we've maxed out the 30,000 grossed up cap with that mortgage alone. And also the salary packaged restaurant meals, so 2,500, and that is also the lower gross up rate, so 1.8868 gets us to about 4,700. So that's just under the $5,000 gross up cap. So that's the sort of takeaways there that you can see from this example, is that we have basically covered the caps in those bottom two. And I did this example like that on purpose, because commonly when I'm getting questions from not-for-profit clients, they are already maxing out those caps generally, and through perhaps a third-party salary package provider, and then perhaps something might happen. So say, for example, the person is then actually also being able to get a car. For whatever reason, there might be some even, commercial business reasons why a car is provided. And this person is also taking that car home and garaging it at home, so overnight, so private use. And so this is a fairly common example where you'll see that the provision of the car is then actually going to be on top of those exempt caps. So let's see what happens to that. And I can see there's a couple more questions. I'll just come to those in chat box in just a sec. So what happens is I'm about to throw a whole stack of figures at you now. So apologies for all of that. But essentially, this gives you a bit of a stepped out process of how you do it. But you can see, if you look at the 15,900 at 1.8868, you can see the 30 there. So we're actually getting that cap is basically going to be maxed out. We're using all that cap. And on the right-hand side, you can see we're nearly at the 5,000, 4,717. That's why there's a nil just sitting below that, because we've actually used all that capping threshold, which is only for meal entertainment. So you can only apply it to meal entertainment. It's all been used. So it really kind of comes back down to that first line, 7,700 at the type 1 higher gross up rate there of 2.0802, just near the top left-hand side there, you'll see 16,018. That grossed up amount there is over and above the cap. So you're going to see that flowing through on the bottom there, in the bottom right-hand side. Effectively, that ends up being subject to your FBT at 47%. So there'd be about 7,500 tax there. So that is essentially how that can work with the interaction of the capping thresholds. So just before I cover a similar example with the rebate, a couple of questions there. If you salary package entertainment, can you gift entertainment to others, parents, spouse, family, etc.? So yes, the salary packaging entertainment, as I understand it, does include your associates, the employee's associate as well, but it will be, of course, the one cap for that employee that will also cover their associates. So you will only have up to that $5,000 cap. And question, parking for staff. Ooh, parking, brilliant. I have a slide coming up on parking, so I'm not sure whether to steal the thunder, so maybe just hang on for me there, and in a few slides' time we will talk about car parking. Another question, hi Judy, does the car in type 1 apply to novated leases? Yes, it does. Yes, so novated leases are generally where you do have 3 parties to a lease. You don't have just the employer and the finance company. You also do have the employee, and that is generally because if the employee leaves, so it terminates from their employment, the lease will actually pass back to the employee. So novated lease arrangements are generally type 1, and yes, very much so for a public benevolent institution. Or does the car novated lease come through type 2? No, so it should come through as a type 1. Fantastic. So just on the FBT rebate example now, you can see same figures. Now we just have to change our mindset slightly now. We are going to have FBT, but the question is, will the rebate be available for all of these benefits or not? The rebate of 47% is also restricted to the capping thresholds. So pretty much what I said before, but now applying for a rebate instead. So you can see that the mortgage is going to cap out that rebate, and the salary packaged meals there, that essentially is going to use up that cap too. So it really does come down to that car fringe benefit that ends up being the one that has, I guess, in essence, no rebate, so not being eligible for the rebate. So full FBT will essentially apply to the car, and the other 2 items will have FBT less the rebate. Rebate is 47%, so you could just say 53%. If you like, that would end up applying to the last 2. And so again, I just have to show you all here lots of figures, and this does go over 2 slides. That's the 2. So just going back to the first slide there, this again, you may want to work through this later if you are a rebatable employer, but you can see how again it is basically that vehicle of that 16,018 that is in excess of the capping threshold, and it's going to end up being that sort of main sort of difference in that the rebate won't be available for that. You can see on step 5 that step 5 is the non-rebatable amount, and you can see that's essentially the car. So the rebate is at 47%, not to be confused with the FBT rate is also 47%. So you'll see 47% maybe more than once through these calculations, but that's because the FBT rate is actually the same figure used as the rebate figure is. So then you can see that the non-rebatable amount means that the FBT that we would have had we unfortunately can't get the rebate on 7,500 of it. So you can see on the bottom left-hand side, we have to take that off. What we calculated was the FBT, and the remaining amount is allowed for the 47% rebate. So that's the 47% referring to the rebate there. And then on the right-hand side, you can see that we then have our FBT tax, which we did have on the earlier slide, less the rebate. So again, I might let those of you that this relates to have a work through those slides, but I hope that gives you a practical example of how those ones work. Now, just going back to chat box, or does the, oh yes, no, we've answered though. So no more questions chat box at the moment. So back onto the slides. So now just a couple more things about the FBT return. So do you need to lodge your return? So for FBT exempt employers, only where you are exceeding the cap. And FBT rebatable employers will have to lodge because they will always have FBT if they are providing, benefits to their employees that are subject to FBT. You will still have FBT if you're a rebatable employer. It's just you pay less. You get that 47% rebate. Other concessions. So I just want to talk about some other concessions and then entertainment. I know we've got about 15 minutes left, so I just want to talk about those ones, and then I'll just jump on to super guarantee and talk a little bit about super guarantee as well. But those super guarantee rules are probably fairly broad across employers, not just not-for-profits. But I do want to raise some of that as well today in case anyone does have some questions or comments that you'd like about super guarantee too. So just a couple more areas of FBT before we move across to super guarantee. So also with FBT, some other specific not-for-profit type areas might be your religious institutions. I want to talk about car parking. Remote areas, I've only mentioned remote areas, sorry, not that there's anything, there's a lot, I guess, generally to talk about specifically there for not-for-profits, but I do find when working with our not-for-profit clients that they do tend to be regionally based. So not forgetting that there can be remote area concessions and exemptions that might be at play with some benefits, especially housing. So that's just something to bear in mind, but I'll come to that slide in just a moment. So just going through your religious institutions first. So there are some concessions. So we're talking about ACNC registered charities that do have the subtype advancing religion and are an institution, so not a fund. If that's the case, then there can be some benefits that are exempt, including those provided to religious practitioners. And also bearing in mind there are some exemptions around your live-in carers and domestic carers. I just do find that comes up sometimes in this area, but it can also come up for other not-for-profits as well. And there are some conditions. So if we go to just those exemptions for provided to religious practitioners for a moment. So there are 3 conditions. So firstly, must be provided by the ACNC registered religious institution to the employee, religious practitioner or their spouse or child, and in respect of the practitioner's pastoral duties or directly related religious activities. That has had a recent refresh in TR 2019/3. So I know we had a question about that a little bit early on today. So if you're not aware of that tax ruling, please go and have a look at that because that does clarify this area. And just some other concessions there. Car parking, good news. You'll be happy to hear a tax person saying good news. We don't always, unfortunately, get to do this. But Section 58G of the FBT Act does provide a broad exemption to car parking. So that is where you are a registered charity. Okay, so all the charities might be singing there if you weren't already aware of that, those of you that are on the line today. Also scientific institutions generally and public educational institutions. Sorry if you're not on that list and I've got your hopes up there, my apologies there, but definitely have a little look for your own organisation, have a look at that exemption just in case that may be available to you for car parking. And as I mentioned before, with the remote area housing, so there is one part of that remote area housing where there can be more remote areas, shall we say, brought into the net for not-for-profits that are listed on the right-hand side there as compared to other employers. So employers generally might be eligible to remote area housing if they do have those conditions where they have the housing in the remote area, and there's a couple other conditions to meet. But there are certain ATO listed remote areas, and I'm just saying that the word remote, it's actually wider and captures more areas for employers that are as listed on the right hand side, so in that not-for-profit industry, so that more areas will basically qualify. That's just one point of difference to mention for not-for-profits, but also just generally bear in mind that you might have operations out in regional areas, and to actually go have a look at those remote area concessions because they might actually apply to you. Great. Okay, so how long do I have? About 10 minutes left. Okay, so tax exempt body entertainment. So this is absolutely a tricky area for not-for-profits, and the main points are there on the slide. So I'm going to mention those, and I will rely on you to please put in a comment or a chat if you have perhaps some particular examples of things where you would like me to clarify. So what I'm saying here is that with not-for-profits, generally not-for-profits are income tax exempt. I have to say generally, sorry, because sometimes there are occasions where not-for-profit may not qualify, but generally and broadly, a not-for-profit entity can be income tax exempt. Now, if the organisation is income tax exempt and they provide entertainment for the FBT law, there is a specific category that applies, and that's this tax exempt body entertainment. Now, one of the main reasons I can think of as to why they do this is that for tax paying entities, for those entities that aren't income tax exempt, they don't get a tax deduction for entertainment. Now, not-for-profits won't care, if you like, about that because they're not putting in an income tax return, those of you that are income tax exempt. So I guess there's a bit of a weighing up here between taxable entities and non-taxable entities. So I think that's the main reason why you then find that there's this category in the FBT law that kind of has some restrictions on not-for-profits. So what does that all mean? Basically, where there is entertainment provided by a not-for-profit that is income tax exempt, that entertainment will generally not get the minor benefit exemption. Okay, so the minor benefit exemption is the less than $300 infrequent irregular, which is very commonly used. Well, I'm just saying that generally you can't use that for entertainment. Things that are not entertainment, no problem. So I'm just talking about entertainment. There are two areas only that are listed in the Act. So that's why I just want to say generally our first step, I guess, is that no minor benefit, very unlikely. So now, can I just now bring that out? There's a couple of steps to this discussion. So bringing that out now to FBT exempt employers and FBT rebatable employers. Now, your organisations are fully exempt and fully rebatable on meal entertainment. So you don't have to worry about the caps. So this is terrific. So what I just said, you don't have to worry, well, FBT exempt employers in particular, because you're completely exempt, don't have to worry about your meal entertainment. FBT rebatable employers do still have this issue. It's just that your rebate will apply to, all your meal entertainment. There's just no cap there. But FBT rebatable employers, please still be careful about applying the minor benefit exemption. Now, if I can also just take this out another step, back to our FBT exempt employers, you'll notice the words on the side are meal entertainment. So you're fully exempt on meal entertainment, but that doesn't include entertainment by way of recreation. So just have a look out for that. So if there's sporting days, golf days, or events that are by amusement, sport, leisure, what have you, that is actually your recreation entertainment, and you're not fully exempt on that. And then you won't be able to use the minor benefit exemption in most cases. So that is probably sounding like a completely different language for those of you that haven't had a chance to get across entertainment before. So I do apologise for that. But that is broadly that area, and yes, it's complicated. So I just wanted to take us through the risk areas there. Are mainly if you are applying a minor benefit exemption, just be a little bit careful if you're actually able to do that. So on that point, I will now move on to super guarantee. Now, there was a question in the chat box, what about FB Super? So I'm not too sure. The only thing I can think of with that question, and I hope I've got this right, is superannuation contributions are not subject to FBT. Okay, so super contributions are excluded from the FBT net. That's why they tend to be a very popular salary sacrifice item for probably, outside the not-for-profit industry, or taxable employers too, very common to salary sacrifice super. Now, so onto super guarantee now. I just have an agenda here with a few things that I would like to talk about with super guarantee. And again, if you do have any particular points you came to the session today that you would like answered, or have some examples or questions, start popping them in the chat box. If it's on FBT or super guarantee, we can go over if we need to as well, so that we can cover off any questions you might have. So we've got about 5 minutes scheduled to go. So please start popping those in there. Think about why you attended the session. If something hasn't been answered, please feel welcome now to pop that in to the chat box. In the meantime, I'll just take us through some super guarantee items here. So I just wanted to cover generally some obligations, the employees' exceptions, paying super, due dates, and the super guarantee charge. So as you can see here on super guarantee obligations are generally the same as for-profit organisations. So must provide the minimum level of super contribution support. It's a quarterly basis. I've got a slide coming up on that. Organisations that are income tax exempt are not exempt from super guarantee. It's a completely different piece of legislation. So it's not in the income tax law, so you still have super guarantee. The rate is 9.5%, but not for much longer. How many days now? About 28 days to go. We increase up to 10% from 1 July 2021. Employee contributions don't count towards those obligations. There was a change in the law on 1 January last year. Time flies. I think that's when it changed. Eligible employees, so generally can be a range of employees. I want to come back to directors, especially if we don't have any more questions. And exceptions, just want to note in particular there, where paid less than $450 before tax in any calendar month is actually not going to be subject to super guarantee for now. So hold on to this one. Our recent federal budget announcement included a scrapping of the threshold. So that's what the federal budget announcement was. Haven't actually seen the detail or the legislation yet. So that could be changing. Non-residents paid solely for work done outside Australia, under 18 years old, employed for less than 30 hours a week. Also your private domestic work as well. Just going to flag those directors and see if we have time to come back to that. And also, and I did talk about directors, I guess, earlier on today too, just to make sure we did include that. So actually, I will just mention that now quickly, because I realised now we did actually cover that a bit at the beginning of the session today. So just as that recap, be careful of your directors. Okay, so if they are being paid and it's in their individual capacity, then there can be super guarantee. Okay, so that's really the point I wanted to make, but I just know I get a lot of questions in that area and just wanted to clarify that. So there is a risk because the super guarantee law doesn't apply just to employees that we would normally think are employees. There is an extended definition. So it also covers people who are engaged principally for their labour. And these are some reasons why I can bring in other people as listed on that slide. And also, just when paying the super contributions, they are paid on a quarterly basis and they're due by the 28th day of the month after the quarter end. You can see those dates are up on the slide there. If they are late or are not paid, unfortunately, it does trigger the super guarantee charge, which can be nasty. To be honest, in practice, it's there's no discretion that's given to the ATO in that law, in the super guarantee law. Effectively, 1 day late can trigger a super guarantee charge. So it's can be quite a harsh regime. A super guarantee charge includes 3 components. So the shortfall and also an interest of 10% component and an admin fee of $20 per quarter. So I see that we're right on time and we're at the end there. So my email address should be there somewhere, but just in case it isn't, it's judy.white, so jedy.white @bdo.com.au. I'm also on LinkedIn. Feel very welcome to reach out to me. And just before we wrap up, there were a couple more questions. If you have time to stay on a little bit longer, do benefits provided to religious practitioners need to be recorded through STP? Oh, that is a good question, through single touch payroll. Look, I'm not, I'm sorry, I'm not entirely sure if there are wages. If it's fringe benefits, no, and they're exempt benefits, absolutely not. If you're talking about sort of wages, well, I presume they are, but that one, I'm not sure. So if you want to reach out to me on email, perhaps that might be better, just to be able to give you some clarity about that. But otherwise, I'm thinking yes. Does super need to be paid on benefits? So again, a similar thing. So what the point is on the religious practitioners, are they getting a wage? Okay, so my understanding in how it works for religious practitioners is it is they're often it's the benefits that are provided to them. That is the point. So again, I haven't. I might be a bit rusty, so in that area, so please feel welcome to reach out to me. I'm not sure if we have too many religious practitioner organisations on the webinar today, so perhaps that's something we can take offline instead. And also, if a director carries out consulting work, works under a contract in total over 40K, does super EP. So once the director does any consulting work, I think no matter 40K or not, your first step is that they would be subject to those things. So I start with that position. The next thing that you would need to do is look at, well, are they an independent contractor or not? It makes me nervous that you've said they're a director. I know a director is going to be caught with payments and will have a PAYG withholding event if they're being paid as a director. So that will bring you into super guarantee and bring you into FBT as well. So having a fine line then between actually doing some other consulting work in the organisation is just a little bit of a tricky one. So highly likely to, but that's where you start. You would have to work through any reasons in your situation why you think that they may not. Great. So that appears to be all the questions that we have today. Thank you to those of you who are able to stay in a little bit longer. Does tend to be a topic that you can sort of have a lot of chit chat or conversation about. So thank you again for joining me. And on behalf of BDO, we really do appreciate you coming along and being involved in this session today. Don't hesitate to reach out to myself or your BDO advisor, anyone around Australia too. I know we have people on today that are outside of Brisbane. Thank you for joining us. Take care and keep well, and hope to get to present to you again another time soon. Thank you and goodbye.